This business about Goldbach levels.
In this Goldbach teaching, I'm going to break down ICT's latest trade to show you how he uses Goldbach for his entries, his stop losses, and also for his take profit targets. Now, it's been a while since I've had a look at ICT stuff, and it looks like his last video was a good 3 weeks ago, so I'm not sure what's going on with Robbin's Cup, but it is what it is. So this is his trade. It was on the NASDAQ. He executed on the 1 minute time frame. He had a short, he added to his short, and then he took profit twice. Okay, so all these key levels and where his stop loss is and where his entry, his main entry is and where his exit is, and these random lines that he's drawn, I will show you on the charts. Now, of course, my knowledge of how ICT trades is a lot deeper than what I show publicly on YouTube. So if you would like to join my Discord mentorship, where I teach you both time and price and how ICT trades using both of those concepts, then there's a link to my mentorship in the description to this video. Now, this is the chart, 1 minute chart. This is the March contract for NASDAQ. Okay, so now let me show you his entry, his exit, and those magical lines that he drew on the charts that he didn't really explain. So this was his trade. He entered here, his stop loss was here, and he took profit here. He also had two random lines. Okay, so this line obviously he used for his take profit, and this one is unknown. However, I will explain everything to you right now. Okay, so let's have a look at the market structure first. Okay, let's look at a higher time frame. So you can execute on the 1 minute, but let's look at the higher time frame. So what do we have? Okay, on the higher time frame, we have this 30-minute fair value gap. Okay, 30-minute fair value gap. But what about this price action here? Okay, so you have what is obviously an order block. Okay, M30 order block. Okay, that is not enough to come into a trade. As you know, I trade, well, some of my trading is using Goldbach. Okay, Goldbach is the price element of Enigma. So let me break it down from first principles and you can load the charts with me. So this is the contract. In case you need to load up the contract, that's what you would type into TradingView and it would give you the contract. Okay, it's not going to show anything, but you type it in and you hit enter and you get the right contract. So you can follow along with me. And we also use the Goldbach indicator, obviously. So the one I like using now is AMD Power Free Goldbach levels. Okay. Now, how do we configure this? I know that the dealing range was half shifted. Okay. And then things will start making sense to you on why Michael took this trade. So what do we have now? This order block, which I drew out, fits in the order block Goldbach partition. Okay, so you have the high being run into a 30-minute fair value gap. Okay, and then Michael saw that it ran into the high of the GB level. Okay, and then what does Michael tell you? He says, buy in a premium and sell at the first opportunity where liquidity is at a discount. Okay, because we know what the Goldbach levels are, right? Goldbach will tell us that this is the high of the dealing range, this is the low of the dealing range, the 50% mark is the equilibrium. Okay, so why did Michael TP here? Okay, this was the first set of liquidity in the discount. Okay, so the problem is Michael tells you to buy in a premium, sell in a discount. It doesn't tell you what the dealing range is though. Now, how about his entry? Right, what led him to come into this trade right here? Okay, so let's go back to the time frame Michael used. Michael was using the 1 minute time frame. Okay, and what is the YouTube 2022 model? Okay, YouTube 2022 model is a run of liquidity, market structure break, and then you enter at the fair value gap. So the question is, why didn't Michael look to enter here? Okay, if that's what he's teaching you, run of liquidity, market structure break, why didn't he enter here? Why did he enter here? Because this is a true fair value gap, because this fair value gap happened in the fair value GB level. Okay, so see here, Goldbach defines what the fair value GB level is. So that's why he came into his trade here. Now he took a market order, so that's why he wasn't precise and he didn't get his entry here. Okay, that's where the fair value gap is. So by the time he clicked sell, it would have slipped a little bit for him. But he is in the fair value GB level. And then he was very happy to put his stop above the fair value GB level, because that's the model, that's the entry model, right? It shouldn't go to this, because this is not in the fair value GB level, okay? This is one of the things that's missing in the YouTube 2022 model, okay? Knowing where the fair value gaps will form. Okay, then it was just a case of holding the trade until you found your first piece of liquidity in a discount. Now, because the Goldbach dealing ranges, we know that this is the equilibrium. So anything below that is a discount. And you had these nice equal lows in the discount. That's where he took off the trade. Okay. A lot of ICT's teachings, unfortunately, are not tradable with high accuracy unless you know the concepts of time and price. And I've taught you some of the Goldbach aspects of price, but time is also very, very crucial to this. So if you would like to learn more about how I trade and my time and price golden bullet trading strategy, there's a link to my mentorship below.